Hey guys, welcome to my Etoro portfolio. In this video, I'm going to just tell you a little bit about myself, my thoughts and viewpoints in investing and what my future plans are. So I am 30 years old, I'm from South Africa. I have been investing in the stock market for quite a few years now. As you can see on Etoro, I've been here for at least since last year, which is when I made my account on Etoro, but I have been investing in other platforms. I am a paramedic, I'm married, I have a son, and I enjoy activities like running and being outside. So about how I see investing. So I don't know if you know who John Bogle is, but he is a very, very well-known man in the investing world who created the concept of investing in index funds. So like the S&P 500 or the NASDAQ 100, these are all indexes, which are a stock with multiple stocks or a stock with multiple companies in one stock. It's like a basket with many stocks in it. So his point of view is that there is only a couple of stocks every year that really do it really, really well in the stock market. And that is what contributes to most of the growth. And it's very hard to choose those few stocks because it's like trying to find a needle in a haystack. So what John Bogle's concept is, don't try to find the needle, just buy the haystack. And that is exactly what buying an index fund is. So John Bogle had this theory of that, well, there's many people who see the same way, but in the stock market, there's only a handful of stocks that do most of the growth every year. And it's very hard to pick and choose these ones because we can't tell the future. So you can try and be a stock picker, but that is very difficult because you can't really tell the future. So if someone had said, hey, put all your money in Alibaba, you can see how badly that's done. So what John Bogle is saying is that what we should be doing is that instead of trying to find the needle in the haystack by finding the stock that does well, we just buy the haystack. And that is exactly what an index fund is. So there is index funds as big as the Vanguard Total Stock Market, VTI, which is every stock in the whole market in one stock. So when you buy VTI, you own a little bit of every company in the stock market. And so that is the systematic risk involved in investing. And so the way I see this is that the majority of my portfolio is in index funds. So some of them are just like normal casual, like VOO, which is a S&P 500 index. Then I've also been moving into leveraged index funds because in my point of view and many other point of views of other investors is that the S&P 500 or like the NASDAQ 100, the general long-term trend is upwards, as you can see in these graphs. And so a leveraged ETF is just going to go up faster. And yes, we will have more volatility. So we'll have bigger lows and higher highs. But my portfolio is not for the older person who's in their 60s and 70s who's now trying to rely on the money that they're generating. This is more, we are in a period of our lives where we are in a wealth generation phase. And so we can have higher volatility as long as we keep on investing. The other concept I use is a dollar cost average. So if you choose to put $100 or $300 or $1,000 in every month and you buy on the first of every month and the market goes up and you're putting in $1,000, it means that you will be buying less stocks because the stock price has gone up, and so you get less stocks for $1,000 or $100. And the same thing happens that when the stock price goes down, you're buying more stocks at a lower price because you get more stocks if the stock price drops if you're buying the same amount of money. So that avoids you from buying too much when it's high or putting in too little when it's low, and that just kind of evens out the journey. I also believe that trying to time the market is very difficult, so I'm quite happy to just hodl. I'm going to just buy and hold, and then what happens, and if we do get like very high highs, I might sell a little bit so that when it does drop, I can buy a little bit more. I add some more money every couple of months, and I do my best to not try and stock pick. If you do look at my portfolio, you'll see I have like Apple and Amazon and Google and Tesla. These are all called blue chip stocks, and they are just really safe, kind of like a camel. It's going to just keep on moving on. So guys, if you are interested in copying this portfolio, feel free to drop a message at any time and I'll happy to talk to you. And remember to copy open trades. I like to keep my cryptocurrency in the portfolio at about 5% because it's very volatile and there's really no knowing what it's going to be doing. But that's just to add a little bit of extra sway. I don't really work with any like commodities like gold or silver or water or cotton. And in terms of leverage, I do sometimes put leverage on like the S&P 500 or the NASDAQ 100, but that's purely because it's going to go up, and I'll do that if I see a very strong buy signal. So that's pretty much a summary of what I do. Thanks for trusting me with this, and If you want any more information, feel free to drop me a message. Thanks for watching.